any further tax thereafter, meaning his sales and supplies are not to be subjected to withholding tax, and there is no question of the bottom line being subject to tax anyway. This was the ruling given by the High Court. So, as of now, before this finance bill becomes the law, commercial importers, they are required to pay at the import stage, and that's it. Now a change is proposed in the finance bill. The first change is the rate is doubled, it's increased by 100%. Now this 2% has become 4%. And additionally, this 4% is not full and final, is not advanced tax either. It is again in the nature of minimum tax. हर साल बजट में एक और एक वो नशे मुकर्रर के तरह चलता है. This time this is minimum tax. Anything which was final tax, search from the computer, final, substitute by minimum. It seems like that. This again seems to be one of those. Now, this particular tax, which was indeed required and formulated to cater to a particular situation, a homegrown situation, not a very desirable one, not a very conceptually justifiable one, but would you see the soundness of the concept only, or would you see also its practicality? It worked, it did well, and now we are told this final tax is no longer a final tax, it is going to be a minimum tax. But as if this is not enough, another important change in this very regime is made. Those of us who would import packing material, regardless of the fact whether you are a commercial importer of packing material or you are a manufacturer, the mere fact that you are importing packing material, no definition of packing material, no qualifying criteria, who is importing the packing material and for what purpose? As you would recall, when this particular provision of the income tax ordinance with regard to withholding tax on goods, services and contracts was brought in, even manufacturers were required to pay at the import stage, but for them it was in the nature of advanced tax as far as raw material for their own consumption is concerned. In bringing this packing material in this whole regime of imports, without any qualifying criteria with regard to packing material or with regard to the class of taxpayer, one would interpret anybody who imports packing material, he would pay at the import stage 4%, and to compound it all, it will be your minimum tax on that item. Now, whether you use the packing material in conjunction with other raw material in churning out your products and selling it, and other raw material is advanced tax, हमें से बहस नहीं है. Packing material is packing material. Now again, I do not know whether it is a typographical error or whether it is something else. It is properly thought of. Who advised them? And why was that advice taken, if at all advice was given? I am not in a position to comment. The fact remains, it is a grossly ill-conceived provision which has no head and tail. At least the manufacturers should have been excluded from this particular import regime, that if you import, then like other raw material, your treatment would be alike. But in the absence of specific stipulation to that effect, I am nobody to interpret it like that. So this is just for your knowledge and consumption, and to brood over it, and to gloom over it as well, that this is the kind of provision that you have, that packing material will be subjected to this kind of tax. One good thing I would say, alternate energy projects, if any plant and machinery is imported and used after 1 July 2009, they will be entitled to an accelerated depreciation at the rate of 90%. Although I have a little uneasiness in this particular provision, just considering section 130, clause 132 of the second schedule, part 1, where it talks of, it uses the term electric power projects. Now, whether an alternate energy project will be a hydel project, probably it will go out of 132. Because 132 companies are exempt anyway. All of you who are IPPs, you know that it is exempt in perpetuity. So if it is examined in perpetuity, and if you are covered by this particular provision, it is only of academic interest, you are not going to gain any benefit out of it. But if it were to be interpreted differently, that this is to cater to projects other than electric light projects, alternate energy projects. Now, I am not an expert in this field, what could possibly be included in this whole category of alternate energy projects, but if they do, then you will be entitled to 90% of accelerated allowance, which is a good feature. At least one feature to boost further investment, if at all, in this whole bleak atmosphere and lots of problems, which you don't find in the finance bill that there's any provision which would boost what Masood was talking about, creating employment, promoting industrial development, removing poverty, so on and so forth. That will all happen not just like that. That will not happen by making tours and travels all across the globe. That will not happen just by word of mouth. That will not happen by an expression of noble intention. And that will not happen just by mere reason of the fact that it finds expression in the budget speech. It will happen only when the financier and the investor on the other end sees economic justification, an atmosphere conducive for his investment, reasonable country risk, and so on and so forth. If that will not happen, all these provisions will lie on the statute book, never to be applied and never to get any benefit from. I'll now refer to the 15 minutes that I have. Retailers have been given a little rationalization in the provision which was already existing, section 113B. And it says that those retailers, with I think qualifying criteria of some turnover, if I am not wrong, their turnover will not include such supplies which has already suffered final tax. Now look at the contradiction in terms. At one place, when you are determining minimum tax, you say, okay, fine. If you have paid final tax under one count, second count, third count, that you have got to pay anyway, over and above 5% on the turnover. Here, when it comes to retailers, we are saying that turnover, and rightly so, it is sound, it should be done, that from that turnover, you will exclude that which has already suffered final tax while applying this particular this tax rate of 0.5%. Even before it was 0.5%, but it did cover turnover which has suffered as a supply withholding tax under one or the other provision. Now this is no longer going to happen, and this turnover has been slightly modified in that sector. And this is, fortunately, this is not a minimum tax. Computer erred here probably due to some bug. It didn't pick up that final, and it has not been substituted by minimum. It continues to be a final tax. A big change in the advanced payment, tax regime, big change. And we have been playing with this advanced tax regime off and on, as if we are not satisfied with one or the other. You would recall that in 1997, a drastic change was made in decades-old provision. And at that particular time, as you would recall, those of you who belong to my age group, you would recall 1922 Act, that it was always based on income. And of course, there was a facility to file estimate of income and so on and so forth. In 1997, a major departure was made, that the advanced tax regime moved from income-based to turnover-based. This was change, and in 2004, again a change was made, moving back from turnover to income-based. We can't decide for ourselves which is good, which is better. And this remained there in the statute book from 2004 until this finance bill. Now I think somebody may have thought it wise, okay, no, we should go back to turnover, because we are, probably it is driven by resource mobilization consideration. Nothing wrong with that. The job of the tax collector is revenue generation, but not revenue generation in a rampant, blind way. This regime has made an amendment that apart from companies, association of persons also are subject to the same provisions. This is one major change this year. And the second change is that your tax of the latest assessment year as the ratio of your turnover of the latest assessment year, this shall be the effective rate, and this you will apply on your actual turnover of the quarter, and you will pay advance tax accordingly. I hope I made it clear. That you will no longer base just based on that ratio and income. You will take that effective rate, the tax to turnover, and that rate will be applied on your actual turnover for this year's advance tax, and in each succeeding quarter you will keep on doing that. But here I would like to point out that perhaps by mistake, they have not amended the due date of payment commensurate with this change in this regime. If I am required to pay my advance tax of the September quarter, I can't be expected to pay advance tax on that basis on 15 September. This is not possible. So last time when this was changed to turnover tax, the dates were changed. September quarter turnover advance tax was required to be paid by the 7th of October, by the 7th of Jan, by the 7th of March, and a provision was made that the last quarter, June, 15 days, will be imputed based on the actual of the first 15 days. Made sense. This year they have inadvertently, I would say, and I would like to assume, they have not corrected these dates. It must be corrected to read 7 October and so on and so forth. Preferably 7th is perhaps too early, but government can't wait for that. Otherwise, normally it should be 15 days following the quarter. That makes sense. But it seems that it is a tall order. They are not going to accept that. But change they will have to, because September quarter advance tax can't be paid on 15th of September. The quarter is not yet complete. I can't ever know what is my September quarter complete turnover could be. And advance tax will also take into account, mind it, your minimum tax obligation as well. One other change, not very material perhaps, but nevertheless a change, that if you have acquired a loan, if you have financed your acquisition of your assets by borrowed money, by loan, then in the event of that loan liability going up as a result of exchange fluctuation, that will be allowed for including in cost of the asset for depreciation purposes on occurrence. The word used is on occurrence. To my mind, if I go by plain English language, occurrence would perhaps mean when the remittance of that loan in discharge of loan liability when paid or repaid is actually taking place. So what will happen to the differences on translation? Well, after all of us as accountants know that as at the balance sheet date, you have got to translate the assets and liabilities in foreign currency on the date ruling on the balance sheet date. Now, if my translation losses are going to be denied, there is going to be a timing difference, and it is not going to be fair. And why not should it be considered when it is in consonance with recognized accounting principles and standards? But this, probably they were required to allow this difference in some particular case of a huge amount. And I think they thought it, because after all, in this country, we try to make laws suiting sometimes specific cases or a specific group or classes of cases, which is not a very objective way of formulating a law. The law should be formulated taking into account objective circumstances, not specific cases or classes of cases. It seems that perhaps in this one as well, the department may have needed to allow some substantial exchange difference to the detriment of the tax revenue. In order to plug that particular possibility in future, they have provided that no, in future, when that loss shall occur, when that difference shall take place, and that will take place only when you effect the remittance or when you discharge the loan. This is our interpretation right now. Hopefully, FBR may come up with a clarification. But if they are going to deny the translation one, then as a professional accountant, I think all of us would have reasonable grounds to have a very major contention on this. With regard to dividend, as you would recall, that in 2008, the law was amended that just as companies incorporated in Pakistan pay sort of dual taxation, one of the corporate profits and the other when are distributed in the form of dividend, even branches of foreign companies are required to pay on their repatriable profits. And there was a lacuna in the law in the way they amended that. It seemed that even pending remittance of that particular branch profit, this will be deemed to be dividend and liable to tax. They have clarified that. It is a sound amendment, justifiable, needed, and it has been done that when a branch would seek to remit their profits, although they have been taxed once on the branch profits like a corporate entity, just like dividend, it will be treated at par, but in the year of remittance. This has been clarified, and the provision of the law has been amended to that effect. Exploration companies, oil exploration and production companies, are exempted from this particular provision. As you are aware, most of this activity is carried out in the form of branches of foreign companies, and under the concession agreements with the government of Pakistan, there is a provision that whatever the rate of tax has been put in as a covenant in the concession agreement, the government of Pakistan cannot take any tax in addition to that. If this were to be taxed as dividend in the hands of branch, then this would have been additional tax, and for a change, we have honored our commitment to such foreign investors, and we have said, we are good boys, we are not going to do anything bad to you. You as a branch will not be required to pay this tax at the time of making a remittance. But other branches will be required to do that. There is a whole change of requirements in terms of requirements with regard to personal individuals and others who are required to file a return, along with wealth statement. An added condition is, and which I think may affect a large number of people sitting here, if you are liable to any final tax based on the nature of income. But before that, let me just mention, all salaried people, this time we are very sort of favoring our salaried people. They are corporate executives, they are philanthropists, etc., etc. So salaried executives will simply not be, the tax law will not be contended with your employer filing the statement, as was the case in the previous year. You will have to file your own salary return if your salary is 500,000 or more. And you will have to file electronically. And you will have to file, along with that, a wealth statement and the reconciliation of wealth. In addition to that, anybody who has paid 20,000 or more in terms of tax as a final tax on a variety of income that is still there, that particular taxpayer, apart from filing the prescribed statement, is also required to file his or her wealth statement along with a reconciliation of wealth. There are a few changes of procedural nature, but quite important in terms of alternative dispute resolution. Certain time frames have been changed, both with regard to the appointment of the committee for alternative dispute resolution, both for the committee itself to resolve that issue, and if they don't do that, the board has got the power to dissolve this committee and replace this committee with another. And the board is also under obligation that once the committee has rendered its findings, it is required to pass its order within 45 days of the recommendation. Don't forget, Alternative Dispute Resolutions Committee is not a final decision, it is only a recommendation, as it ought to be. A very small change with regard to maintenance of record. All of us almost belong to corporate sector, and you know, under the company law, we do maintain and retain records for 10 years. This time, along with the change which was made in the past few years, that you retain a record for 5 years, this time an additional condition has been imposed that you will be entitled not to retain your record for that particular period if the record does not pertain to any pending proceeding, any rectification, any appeal. So please don't shred it, because you know the consequence of shredding. So you are needed to retain all the records for appeals, rectifications, and so on and so forth. I think that is not a bad amendment. Indenting commission again is not subject to, is subject to final tax, but at an enhanced rate from 1%, which was presently applicable, to 5% of the indenting commission. And ladies and gentlemen, I think we are about to break for Asar prayers. There are numerous other amendments. मैं आपका दिल दहलाना नहीं चाहता prosecution provisions को deal करके. There are numerous changes in prosecution provisions where the penalties have been raised substantially and where the power to carry out proceedings, both civil and criminal, they are being amply provided for. Of course, they were there before as well, लेकिन कोई कसर रह गई थी वो इस फाइनेंस बिल ने पूरी कर दी है. But I didn't deal with that because I don't want to end my humble submissions on this August forum with that note that you will just carry prosecution and all that, go with a light heart, that you will be spared of a 30% tax on bonus hopefully, and until next year it will be okay. Thank you very much.
I would like to welcome our chief guest, Mr. Irfan Nadeem, who has just joined us after flying all the way from Islamabad. Thank you, sir. In addition to the channels I mentioned earlier, I would also like to thank PTV, Dhoom TV, Apna TV, Dawn News and Metro TV for covering this program. I have a parking coupon with me, and the number mentioned on it is AKX 842. So it can be collected from Dr. Shahida during the tea break. I can see quite a few people yawning, and obviously for the terrible night we had yesterday. That's why we have made arrangements to freshen you up for the tea. Arrangements for namaz have been made at Nargis Hall and near the pool side. And we will continue with the remaining part of our program at 7:15. Thank you very much.